property markets are littered with wives' tales, some things that the consensus believed to be true, but evidence doesn't support. And I was as guilty as everyone a long time ago now, Bushy. But when I become to realise that the information I was relying on to make these really important financial decisions for my own family's life, I would stumble across some evidence and then go, geez, that totally contradicts what I believe and what all the banks are saying and what all the economists and every expert has said. But it was compelling evidence. And that, I guess that's how I learned that no one has ever studied Australian real estate history. It wasn't until that, like, I was horrified when I discovered that, but I sort of thought, well, property's too important to not understand deeply. So, that's my drive. I've got an innate urge to understand what I call the why of things. Someone said it's the science brain. You need to understand why and cause and effect, and that's what we've done. And what I want to share with your audience is about 10 or 11 of what I think are the biggest myths about property markets.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show for Australians who want to learn how to unlock their full self, health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and to live by design. Subscribe now and join me and get invested in the life that you really want. Let's get started.
Now, every second person likes to think that they understand property markets reasonably well. And almost everyone believes that the experts in this space are economists, banks, valuers, sales agents and buyers agents. But as show favourite Simon Pressley is about to demonstrate, none of that is true. Now, we all live in a property. Across our lifetime, most of us will live in maybe 5 up to a dozen different homes. But it's important not to confuse our personal association with a home with actually understanding why the capital growth rate varies widely from year to year, city to city, place to place, right across the country. Now, according to Simon, as the highly acclaimed head of research at Propertyology, 100% of Australia's population of 27 million people have grown up believing a heap of wives' tales, merely because they seem logical. And if you hear something often enough, you start believing it must be true. Now, Simon says that these deep-seated beliefs get regurgitated every day by a bunch of people who have been put on a pedestal and referred to as so-called experts, with most of them being self-professed. But little does anyone know that the evidence doesn't support most of the mutterings of the masses, as we're about to find out. But what does it take to be classified as a property expert? Now, let's just think about this. If we compare it with the deep understanding of the practice of medicine to become a doctor, you need to complete a 7-year university degree where you learn the cause and effect of countless ailments associated with the human body from evidence-based studies. The medical expert then continuously refines their knowledge by combining the theory acquired from textbooks in the lab with years of practical experience treating thousands of people. But when it comes to property, there isn't a single university degree, training course or textbook devoted to evidence-based explanations of the true cause and effect of property markets. For perspective, Propertyology's most experienced buyer's agent has revealed that he's completed a 4-year university degree in property economics, and he found that there wasn't one single piece of useful information regarding property market performance. So today, we're going to put a number of the so-called experts' most widely held property beliefs to the test to see if they actually stand up to data-driven evidence in order to expose those that don't as merely myths so that you can then make much better informed property decisions. And to do this, as you've probably already guessed, we're joined by Australia's #1 property analyst and Real Estate Institute Hall of Famer, Simon Pressley from Propertyology. And he's going to surprise us with his findings. And he's the man I often refer to as the Warren Buffett of Aussie property. So welcome back to the show, Simon.
G'day, Bushy. Good to talk to you, and thanks for having us back, mate.
Mate, really looking forward to this one. I know when you do things, you don't do it in halves, and you really go to great depths to uncover the facts versus the fiction. But I guess to kick things off, why did you decide to evidence test many of our age-old, widely held property beliefs?
Well, the property markets are littered with wives' tales, some things that the consensus believed to be true, but evidence doesn't support. And I was as guilty as everyone a long time ago now, Bushy. But when I become to realise that the information I was relying on to make these really important financial decisions for my own family's life, I would stumble across some evidence and then go, geez, that totally contradicts what I believe and what all the banks are saying and what all the economists and every expert has said. But it was compelling evidence. And that, I guess that's how I learned that no one has ever studied Australian real estate history. It wasn't until that, like I was horrified when I discovered that, but I sort of thought, well, property's too important to not understand deeply. Not my fault they don't have a university degree that teaches the cause and effect of property markets, but the information's there. It's just not passed up in a textbook. So, yeah, that's my drive. I've got an innate urge to understand what I call the why of things. Someone said it's the science brain. You need to understand why and cause and effect, and that's what we've done. And what I want to share with your audience is about 10 or 11 of what I think are the biggest myths about property markets.
Yeah, well, pretty rare and very refreshing, mate. So let's now start to unpack them one by one with what you very aptly described as the 11 pieces of nonsense that many people believe about property markets. And let's start with a notion that Sydney and Melbourne are generally the best performing markets. But what's the data demonstrating on that?
Well, so certainly Sydney and Melbourne, there's no question they get commented on the most, but they get commented on the most because they're our two biggest cities. And most of the property media live in Sydney or Melbourne. So they're talking about their own hometown. But property always has a strong confirmation bias. Everyone always talks more about their hometown than anyone else. So that is true. Sydney and Melbourne get commented on the most. They are the two biggest. That is true. And they are among the most expensive. But in terms of the property market performance, none of that's relevant. It never has been, never will be. What we do know is Australia has more than 400 individual townships. Of course, there's the 8 capital cities because we've got 8 states and territories, but there are more than 400 townships. Sydney and Melbourne are just 2 of those. Over the last 20 years, the evidence says that the annual average change in Sydney and Melbourne's median house price is very much middle of the pack. So Sydney has seen 5.6% average annual capital growth over the last 20 years, Melbourne 5.8. That's good. What that means is a typical home in Sydney and Melbourne has tripled over the last 20 years.
Yeah.
But there's about 50% of Australian townships that have done better than that. And if we look at the performance of apartments in Sydney and Melbourne, it's deplorable, really. They're in the bottom 30% of the 400 townships in Australia over the last 20 years. So that's the evidence about Sydney and Melbourne.
Yeah, I love that. Now, a generally accepted property belief is that warm climates are better than cool climates. So what's the actual evidence indicating about that one?
Oh, look, property, so many decisions get made about property based on things that people like. They just don't realise that likability is influencing the decision. And warm weather, whilst every human's different, warm weather influences some people's perceptions about things. But again, what does the evidence tell us? When we look at the last 20 years and many of the best performed property markets across this enormous country, the 5th largest country in the world, many of the best performed markets have been in the state of Tasmania, which is our coolest state of the 8. But then we look at our smallest capital city, Darwin, in the far north of Australia. That same 20-year period, when we break it up into 2 separate decades, for the first decade, Darwin was the best performed property market. For the second of the 2 decades, it was the worst performed of the capital cities, but it was bloody hot in both decades. So warm weather has nothing to do with property markets. To, I guess, help the audience open up their mind a little bit, let's talk about an off-Broadway location, the regional New South Wales location of Orange. Orange is Australia's 58th largest township, population of about 44,000 people. The temperature in Orange very rarely ever gets above 25 degrees at any stage of the year. It snows every winter. The population growth rate is always well below the national average. But over the last 30 years, Orange's median house price has only declined once, and its performance over the decades is superior to Sydney and Melbourne. So it's got nothing to do with the climate.
Love it. So ignore the temperature. Now, the next one's a big one, as most property players hang on to the belief that housing demand and capital growth are all about population growth, particularly with some of the recent media debate on all this. But what's the data demonstrating?
Look, it makes sense, doesn't it, that if the population grows, we need more houses because what's housing? People live in it, but the evidence doesn't support it at all. And this was when we started this conversation. You know, what drove Simon to spend a lifetime studying real estate history? It was that. I used to be as guilty as everybody else, thinking the population growth is what I need to chase. Now I don't give a rat's what any town or city's population growth does, because the evidence says it's not important. But the best case study I can give to anyone who wants to understand how little influence population growth has on property markets, let's talk about our fourth largest city out of more than 400, the city of Perth. If we wound the clock back, Bushy, to the year 2006, and you and I lived in Perth and we bought a standard house, we would have paid $480,000 in the year 2006 for a house in Perth. Add 14 years to that. Over the following 14 years, from 2006 to the year 2020, Perth had the highest population growth rate out of all of the 8 capital cities. Spectacular population growth. But your house and my house that we paid $480,000 for in 2006 was worth the same, $480,000 14 years later, with the highest population growth rate. That's a long period of time, 14 years. Every single year, there are lots of locations across Australia that have very mild population growth, but their property market might perform spectacularly well. The township of Bega, most people never heard of that. It's a regional New South Wales location. Over the same 14-year period of time where Perth's house prices went sideways, Bega's median house price increased by 80%, 80, and its population growth rate was only 1/3 of the national average. COVID is not that long ago. The international border closed. No population growth in Australia. Sydney and Melbourne's population actually declined for two consecutive years, but property markets boomed. And finally, on population growth, let's talk about Broken Hill. There was a period of time where Broken Hill was one of Australia's biggest cities. It's not now, but over the last 20 years, Broken Hill's population growth has declined. There has been no growth. Its population now is lower than what it was 20 years ago. But over that same 20-year period of time, house prices have tripled in value. It's not an anomaly. Population growth has little to do with capital growth.
Yeah, I love it. Extremely well said. And the graphic that we're looking at certainly demonstrates that. The one that I really liked, Simon, was Ballarat in Victoria. 107% house value growth over that 16 years, but only 29% increase in population. So, time and time again, the data is telling the story. It's the capital growth isn't about population. There's a whole mix of other factors in there. So, love that. Really enjoying this, Simon. Let's stay with us, because after a very short break, we're going to be back with more Property Mythbusters.
At Know How Property, we're more than just the best residential and commercial loan arranger. We craft a plan for your lifestyle and future with our 3-stage strategy. We start with your lifestyle strategy. Whether it's finding your dream home in the perfect location or adding to your residential or commercial portfolio, we listen to what you want and need to do. Next, we create a financial strategy. We dive deep to uncover what you can do, ensuring your finances are set up for success. Finally, we implement our validation strategy. We become your John West of property, because it's the property we reject that makes sure you get the best. Know How Property. Smart, tailored strategies for your life and investments.
Now, continuing our great chat with Simon Pressley from Propertyology on exposing the nonsense that many believe about property markets, a widely held opinion is that the best locations to invest in are locations that everyone wants to live in, which sounds logical on the face of it. But what does your data research reveal about this, Simon?
Yeah, well, as we were talking about earlier, Bushy, it's so emotive, property, and it's important when we're making big decisions about property that we all recognise that. I've got emotions just as much as you do, but emotions don't drive property market performance. So, I mean, every human likes different things, don't we, Bushy? Some like steak, some like seafood, some like lamb, pork, some people are vegetarian. Well, we like what we like. It's a very subjective thing. So it's impossible for anyone to make a really intelligent property investment decision based on where people like to live. You actually can't measure that. If you think of some idyllic locations throughout Australia, Bateman's Bay, the Barossa, Byron, Noosa. Lots of people would say, geez, I'd love to live there. But actually not many people do. 5.5 million people live in Sydney, more than any other location in Australia. 22 million Australians don't live there. And lots of them, excuse the French, would describe Sydney as a shithole. So you can't measure likability. And it's important when making property investment decisions that you're aware of that. Specific to Sydney, over the last decade, a net 250,000 people have relocated away from Sydney to different parts of Australia. So it's actually nowhere near as popular as what people would think it would be. We do live in a very diverse country, and we're driven to different corners for different reasons.
Yeah, very well said. There's a common perception that capital growth is higher in coastal locations than inland, but your research demonstrates otherwise. So walk us through that. Yeah,
again, likability. So the person who likes surfing or fishing, the best place where you're going to get the most capital growth, according to them, is coastal. Well, about 85% of Australia's population live in a coastal city or a coastal township, but the evidence says there's actually zero correlation between capital growth and whether a location is coastal or inland. Now, it should not surprise anybody if they really think about that. The water is always there. The coastline is always there. So if it was this magic gold dust that made things grow more, there'd be booms right throughout all these locations every single year, but there's not. When I did a study on comparing Australia's most highest profile coastal location, Bondi Beach, one of the most highest profile coastal locations in the world. And what did the evidence tell us about Bondi's property market performance to compare to some inland locations? It's a study we did a few years ago. So if we wound the clock back again 20 years, Bushy, we would have bought a standard property in Bondi for $450,000. 20 years later, it had tripled in value. It's worth about $1.5 million. Spectacular. But what else could someone have done 20 years ago if they had $450,000? And let's deliberately focus on inland to see if there is any truth to coastal versus inland. So for the same $450,000 20 years ago, you or I could have bought not one, but 4 houses in 4 different inland cities, specifically Dubbo in New South Wales, Launceston in Tasmania, Gympie in Queensland, and Bendigo in Victoria. All inland, 4 different states. The combined median house price, $450,000 20 years ago. If we did that with our $450,000, we would have made $600,000 more than putting $450,000 into a property in Bondi.
Love it. The numbers speak for themselves there, Simon. Absolutely glaring for anyone who wants to take note of it. Now, just about everyone in property believes that land appreciates, buildings appreciate, and the newer the better. But does this actually hold true under the weight of your evidence, Simon?
Well, look, when you're looking at a tax return, it will always say that buildings depreciate. But when you buy a property, you're not buying a tax return. You're buying some terra firma with whatever dwelling that's on top of it. So, no, it's actually rubbish. I'll give you an example of my own. Within my own portfolio, my oldest property is now 115 years old. It's a very basic 3-bedroom house on a modest block of dirt of only 345 square metres. But over the last 10 years, it's produced 140% capital growth. I haven't renovated it. That 140% is more than double Melbourne's 60% over the same 10 years, Perth's 30%. Sydney had 90%, and Brisbane and Adelaide both had 85%. So again, a basic 3-bedroom house, 115 years old, only a 345 square metre block.
Yeah, and just further evidence of never assuming what you hear. Now, this next one, a lot of property players believe that big is better. But does this actually pass your data-driven snip test then, Simon?
No, again, surprise, surprise. So if we look at the current median house price of Australia's biggest cities, and this graphic here, we've got the 20 most expensive median house prices, and only 4 of the 20 are capital cities. Yep. So the 20 most expensive median house prices in Australia, only 4 are capital cities. We've got 12 of those 20 have a population of less than 80,000 people. Most expensive locations in Australia, 12 out of 20, less than 80,000 people. Kingscliff is one of those. Kingscliff is, ninth most expensive township in all of Australia. Got a population of about 10,000 people. Median house price, give or take, $1 million. So big is better. Everyone wants to live there. Coastal, inland, warm weather, cool weather. It's all nonsense.
Yeah, and I'd like, the areas like the Yass Valley and Lake Macquarie and even Coffs Harbour appearing in that context as well. So
Hahndorf in the Adelaide Hills.
Yeah, exactly. Yeah, a great spot. I love that part of the world. Clearly more great evidence of myths being destroyed by data. So let's take another quick break before exposing popular perceptions about major economic shocks, train stations, migration and mining. So stay with us for more. Now, we're enjoying a very revealing data dive that's dispelling popular property myths with Simon Pressley from Propertyology. So, Simon, given the sensationalist gloom and doom outlooks of the fear-fueled mainstream media, there's a common belief that property prices can't grow during moments of major adversity, such as wars, the GFC, recessions and pandemics, etc., because the sky's about to fall in and the world's about to end. But what does your research on history show us about all of this?
Well, it sort of seems like every 5 to 10 years there's a major moment of adversity with, of course, different causes. We go right back more than a century, Bushy, and the absolute property market crash that we feel like we're reading about every single month. Australia's really only ever had two. That was in the Great Depression, so the 1930s, and the 1890s. So we've only had two, and the last one of those is nearly a century ago. But some other, I guess, really prominent moments of adversity. We had a 17-year period not that long ago. You and I were born when we had three national recessions over a 17-year period ending 1991. Most living Australians today haven't seen a recession. Imagine having three in just 17 years. But the combined capital city median house price over that 17-year period of time increased fivefold. Heck of a lot of money. So do recessions cause property market crashes? No. We had the international border closed for a bit more than 2 years. Property markets boomed. We had COVID lockdowns. We all had to stay at home during that boom. We've had lots of natural disasters in pretty much every capital city and region in different years. Natural disasters don't cause property markets to crash. And if we think just recently, the RBA with the cash rate from May 2022 to November 2023, one of the sharpest rises ever in the history of the RBA cash rate. But yet property markets, not saying in every location in Australia, but a lot of them, prices are more today than what they were at the start of that interest rate cycle. So, always beware of the fearmongers in property markets.
Yes, as I often refer to you, mate, as the lemon suckers, as you like to refer to them as, the thing that never amazes me is that the mainstream media, just what we learn from history there is that they just don't learn from history because it doesn't suit the narrative, sadly. But let's turn now to the popular focus on transport infrastructure, because many in property are led to believe that properties close to the train station produce the most capital growth. But does this stand up against your evidence?
No, it doesn't. I remember doing this study several years ago now, again, wanting to understand the cause and effect of things and thinking back then a lot like how most people still think, what do I like and where do I want to live? And train stations might appear on some people's lists when they're thinking of buying your home. How do I get to work? I catch a train, so I've got to buy a house near the train station. There's no evidence at all that marries up a correlation between property market performance and train stations. In fact, of those more than 400 townships, there are only 7 of them, Bushy, where you can catch a train to work in the first place. The city where most people catch a train to work is our biggest city in Sydney. But according to the census data, 90% of people who have a job in Sydney actually don't catch a train to work. And when we look at the change in median house prices, suburbs closer to the train line compared to getting further away from the train line, it's a dog's breakfast. There's no trend, there's no pattern there whatsoever.
Yeah, I love that. Now, given that property values have gone up in many areas at the same time that Australia's opened the floodgates to new migrants post-COVID, there's been much media debate suggesting that overseas migration is a major driver of property prices. But does this hold true when you apply your evidence?
Oh, surprise, surprise, Bushy. No, it doesn't. Look, we can circle back to the very first point we were talking earlier about population growth. Overseas migration, is one of only three components that can add population to a location. Every time throughout Australia's history when overseas migration has been high, if property prices have gone up, there's been all sorts of moaning and groaning about the migrants are the ones to blame for forcing property prices up. When we actually look at the evidence, the official federal government evidence, over any 5-year period, the number of overseas migrants who have arrived in Australia in that 5-year period of time, only 3 out of 10 actually buy a home. They can't influence the value of anything if they don't buy it, including properties. Most overseas migrants rent, and they rent for many, many years. A lot of them still haven't bought a home after being here for 10 years. So they're driving demand for rental accommodation, which puts pressure on the prices of rent, not on the prices of property prices. If we think of some specific locations, I like giving evidence to the audience. So places like Noosa, Kiama, Bowral, South, the Surf Coast, they were some of our more expensive locations we were talking about earlier. They get very little, if any, overseas migration each year. It's very expensive. If we look at the location or the city in Australia that has the most overseas migrants, Sydney, I've got 2 separate 5-year periods of time here where we've dug the evidence out. The 5 years ending 2002, Sydney's median house price increased by 98% in just that 5-year period of time. Overseas migration in Sydney in that 5 years was 222,000, quite a bit. Let's look at another 5-year period ending 2009. Overseas migration was a heck of a lot more. 342,000 people in that 5-year period of time, 0 capital growth in that 5 years.
There you go. It really never hesitates to amaze me, mate, how the media in particular likes to have their metric of the moment. I think you've got a better expression than that even, but they try and draw 2 things together and make them the cause and effect exercise. As we know, properties like the weather, there's so many dynamics, you're not going to be able to guess what happens tomorrow, yet alone know what happened yesterday. So I love that. Now, the other area that I just want to touch on, which is a really interesting one, is that, long before the big fall in property prices in many isolated mining towns following the sharp decline in resources in the early 2010s, there's been a very widely held belief that mining towns are to be avoided when it comes to property. But does this actually hold true?
Well, depends. What we do know is what has the single biggest influence on property markets, not population growth, it's economic growth. Now, mining is one of 23 industries that make up an economy. And I would argue in Australia, more than any other country, at 195,000 on this planet, mining is critically important. So anyone who wants to make the best financial decisions in the asset class known as property, if you want to totally disregard mining, you're harming yourself. What I personally would never do would be invest any amount of capital in a one industry town, whether that was one industry mining, one industry tourism, one industry agriculture, whatever. Don't invest in a one industry town, because each industry will have a downturn, not just mining. And when the jobs are lost, if there's not a lot of other industry sectors to get employment in, people will obviously leave town and find employment somewhere else. But just I guess a mining specific story, most people would be surprised to learn that in 2008, not that long ago, the Northwest regional city in WA, Port Hedland, was Australia's most expensive city for housing. Port Hedland. Population then of about 11,000 people, Bushy, had a median house price of $550,000, which was, wait for it, 18% more than Sydney. 2008 is not that long ago. What to take away from this is not to just bag mining and discount mining, is focus on how mining created that in Port Hedland. It's job creation and job loss. That's what property markets is about, not mining or population growth. It's job creation and job loss.
Love it. Follow the money, follow the jobs. You're off to a pretty good start. Look, thanks, Simon. This is all certainly shattering a host of the old widely believed property truisms. So stay with us, because after another very short break, we'll be back to summarise the takeaways along with what you really need to be focusing on when making property decisions. So see you on the flip side. Now, welcome back to our very informative and insightful chat with Simon Pressley from Propertyology, where he's convincingly smashed to smithereens a host of long-held, widely believed property myths. So thanks for taking the considerable time and effort to do that, Simon, and to research and use solid evidence to expose all of these very common misleading property beliefs. But to sum things up, what are the key takeaways for property players from everything we've talked about today?
Well, hopefully what people now realise is property markets are incredibly complicated. The more I've learned about property markets, the more I've realised that perhaps other than developing a cure for cancer, there's nothing more complicated on the planet than understanding property markets. There's always going to be, on any given day, there's going to be more commentary about real estate and property markets. It's our most popular asset class to invest in. We all live in one. So you're always going to hear a lot of commentary. Most people say what they believe to be true. But as we've seen from 11 different myths, what people believe to be true is the opposite of what is true. So have your wits about you every single day. As much as 90% of the material that's published in the mainstream media each day about property markets is factually false. What you can do if you've listened to this interview with Bushy and I is remind yourself of those 11 myths. And when you see or hear someone making a statement in the media, disregard their own name or title and think, hang on, they've said something that is supported by the evidence or contradicted by the evidence. If they're constantly saying things that are contradicted by the evidence, they're not an expert. So you should have your wits about you with everything else that they say if they can't get the basics right.
Yeah, extremely well said. It's just reinforces to me that you don't assume anything and don't accept motherhood statements, and be very careful about where you get your property information, and beware of so-called experts with vested interests that are pushing your barrow that suits their purpose, not yours. So extremely well said. Now, in the light of all of this, what proven principles and approaches do property buyers, sellers and investors need to apply when actually assessing property decisions then, Simon?
Well, I think if you're buying your family home, the number one thing you need to satisfy is what's going to make you happy. But if you're investing in real estate, happiness, the ultimate test for happiness is 10, 15, 20 years, whenever it is you're going to retire. What's going to contribute to your happiness then is the quality of the information that you rely upon to make a financial decision, which has got nothing to do with your home, whether you would like to live in that city or whether you'd like to live in that property. That's not the objective at all. If you're investing, you need to see property as not bricks and mortar or not a home. You need to see property as a financial instrument. So strange as it may sound, you need to, I guess, look through the lens of more like what a share investor would do on the stock market, where there is no bricks and mortar or nothing tangible. But you know, when a share investor looks under the hood of a company, they're mostly considering the decisions that have been made and economic considerations that are going to influence the value of that company. As a property investor, you need to think more like that than all the emotional stuff that we get attached to with homes.
As always, extremely insightful and very well said. I really want to thank you again for all of these very revealing insights, Simon, which just reinforces the need to never assume or accept anything when it comes to property, but let the data and the evidence-driven insights from proven performers do the talking, like yourself and the Propertyology team. So I really want to thank you again for opening our eyes and ears and blowing our hair back a bit to a much bigger and brighter world in terms of property opportunities. So let's keep the conversation going, Simon.
Always a pleasure.
Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. Make sure you subscribe to Property Hub for free. Get your weekly dose of Get Invested inspiration along with every episode of Realty Talk, Australia's top online property show for red-hot property investing news and insights direct from industry leaders and influencers. And finally, I'll see you next time.